let's talk real estate lending. Specifically, getting a loan on your first deal. What does it look like? What to expect? It's everybody's least favorite thing to have somebody digging into your credit, looking at your income, and telling you what you can actually afford when it comes to a home. So today, let's dive into everything that you need to get pre-approved for your first investment purchase. Is it different than your regular primary home purchase that you may or may not have gone through? Today, we will uncover all of the steps so you can get on your way to real estate investing. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we jump into today's video, make sure you take a minute and hit that like button. Be sure to leave a comment below and don't forget to hit that subscribe button so you don't miss out on future videos. I am here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. So you've decided you want to make your first real estate investment purchase, and maybe you talk to a real estate agent, maybe you have not yet, but you know the very first step you need to take is getting pre-approved, actually talking to a lender about those numbers, and they get to tell you what you're approved for and really set that budget for going forward. And so today I want to outline for you everything that goes into that, what to expect so you know exactly what to say, how to say it as you go in and get ready for this first loan. Step number one is to do your research. I say that all the time in these videos. You need to do your research on your lenders, on your real estate agents, on your market. Research is a huge part of things. You wouldn't just invest in stocks and crypto and any of those things without doing your research first. So please do not skip that step when it comes to real estate. Just because your brother or friend or uncle or whoever has a mortgage license, do not just use them, please, unless they have real estate investing experience. So do your research ahead of time. Research the top lenders in your area. Hey, research the top lenders in your state and find out who would be best fit to help you with this. Now, a lot of times I hear from people, hey, I've been pre-approved by my bank, or I'm going to go talk to my bank. That's great. Maybe you use Chase or Wells Fargo or any of those big companies. I just say when it comes to working with somebody like that, it is very difficult because you lose out on the one-on-one experience that you would get from a loan officer that you've got their direct cell phone or office line to get in touch with at any time. When it comes to those big banks, I challenge you to try to get a hold of them on a weekend when you've gone out looking at homes with your realtor and real estate agent and you need to crunch some numbers. To them, you're just a case file and just another of the millions of loans that they're doing. If you're working with someone more local or someone top in your state, chances are they're doing much less volume, they've got more personal attention to your file, and they've got more at stake for your file. So look for somebody that is in that industry. A broker would be amazing. A mortgage broker can actually help shop out deals for you and present you with the best possible options. So do your research. Again, maybe you know somebody or you've used somebody in the past, but make sure that they are investor friendly. And you should be asking them questions about, can I put down 3.5% down with an FHA loan on my investment purchase? And they should be able to have an answer to say, nope, if it's not your primary residence, you cannot. You need to be asking them all sorts of questions. What should I expect as far as interest rate? If they don't have something off the top of their head, they're not the right fit for you. So ask good questions and make sure that you are doing your research ahead of time so you don't make a mistake, because if you choose the wrong lender, things may seem smooth up front, but I promise you, you're going to feel it in the deal and it can impact the deal that you're gonna get in the future. So you've done your research and now we're on to step number 2, and that is getting all of your financial documents ready. It's good to do this beforehand so you can have that conversation with your lender and let them know kind of the overall scenario. They're still gonna ask you to provide those copies, but the longest part of the pre-approval process very often comes down to a buyer needing to go back and find all of these documents. And so they feel that the lender is being slow when in reality it's you not getting your documents in. So why not do it ahead of time? Everybody's looking for the same thing. So what is your lender going to be asking you for document? Number one, they're going to want to see your 2 most recent months of bank statements. Make sure you've got those ready, log into your bank account, pull those up, save a PDF, have those ready. The next thing they're going to want to see is your 2 most recent pay stubs. If you've got a W-2 job, this should be pretty simple. Log onto your platform online or ask your HR rep to give you those check stubs. They can provide those for you and you have those on file in a PDF ready to go to the lender. Probably the hardest document they're gonna ask you for is your 2 most recent years of tax returns. So if you're a W-2 employee and you use TurboTax or something like that, it should be easy to log on, grab those documents and have those ready as well. If not, if you use an actual tax preparer for those things, just shoot them an email. They should be able to give you access to those things pretty quickly within 24 hours. So just let them know that you're going to be looking to make a purchase this year and that you just need copies of your 2 most recent tax returns. And as a bonus, you might as well have ready, if you own a primary residence, your 2 most recent mortgage statements there, because they may want to look into that to see what kind of equity you have, what your debt and liabilities there are on that side. And that's it. That's all you need to have ready. If they take a look at all of those documents and they need more documentation, they will ask you for it throughout the process, but they can get very far along the process with just those few documents. Go ahead and have them ready before you have that initial call with the lender, and they will be pleased to get you a pre-approval within 24 hours. Step number 3 is actually picking up the phone and making that phone call to the lender. I know it's scary. That's the one big step where they're actually gonna run those numbers for you, tell you what you can afford, but you need to make it happen because you want to gain that financial freedom and start growing your wealth in real estate. So pick up the phone, make that phone call, and all you need to tell them is that you are looking to make an investment purchase. You want to see what you qualify for. You're expecting to look for certain cash flow scenarios, and that you want to see what you can pre-qualify for so that you're ready to get out there and get shopping. I remind you all the time that you don't need to make millions of dollars to make these purchases happen. If you buy a property that already has a tenant in it, they can actually count 75% of that income that comes from that property as income for you going forward. So let the lender know you're looking for an investment purchase. Maybe you don't make $300,000 a year, so they can't qualify you right off the bat with just that, but let them know you may be looking to use future rents. Let them know that's the term that we're looking for. They will use those future rents. It will bring your buy box down a little bit more narrow because, again, you're going to be looking for a currently tenant occupied property, but they will be able to use 75% of those future rents, which oftentimes, if we're looking for cash flow, is going to more than cover that mortgage. And so even if you barely qualified for your primary residence, you're still going to qualify here. So let them know that you're looking for those future rents to be counted in there. They will run that scenario for you and give you an idea of exactly what you'll be looking for. Now, during this conversation, you're going to be talking with them about your investing goals, what you're looking for, an idea of price range, because again, you've already done some of that research ahead of time, and kind of letting them know what you'd be expecting for cash flow wise along those lines. Once you get through that, then they're gonna invite you to fill out a mortgage loan application. And from there, they will email that over to you, just a quick link to jump on there, start filling things out. It's gonna ask you for information from all those documents that you've already gathered, and then you're also gonna send in those documents all at the same time. So you're gonna have this conversation with your lender, fill out that mortgage application, send in those documents, and then you're on to the next step. The next step is reviewing your loan options. So the lenders run your credit, they've received your application, they have all of your documents, they've already built a file, and now they're actually going to give you a call or sit down with you in person and talk through all of your different loan options. They should be able to tell you if maybe you're house hacking and you're able to use a 3.5% down loan, you're gonna use an FHA type loan, or maybe you're looking at putting down 25%, so you're gonna go conventional, or you're gonna put down less. What's that gonna look like for your interest rate? They should be able to walk you through all of those scenarios. If you chose a mortgage broker, they are actually going to shop out those interest rates for you and give you the best possible scenario and walk you through exactly what that monthly payment might look like. And then we can start to look at what your cash flow will actually be like. If you've used a direct lender, meaning they're lending their money and then eventually selling off the loan, but if you're using a direct lender, then they're just gonna present you the one option. As far as interest rate wise goes, they may have other loan programs that they can put you into to help achieve whatever cash flow scenario goals that you're looking for, but they'll have that conversation with you, present you those options, and from there you'll know exactly what you're working with that you can take to your real estate agent so that you can calculate the cash flow scenarios and make sure that you're making a good investment. And lastly, you're gonna take all of that information that you just got from the lender and you're going to choose the best loan option for you. Feel free to shop around lenders, feel free to ask for a better interest rate, find out what you can do to get the numbers where you want them to go. So keep in mind, this isn't just a one thing offer here. You can say, hey, I actually need this interest rate to be here so that I can cash flow in this scenario. And they will present you different options to make sure that you're fitting in that range. It may cost you more cash out of pocket, but that's gonna allow you with all that information to find out what makes the most sense for you. And you're gonna choose that loan option, and that's really gonna help you narrow down that buy box. I would say a mistake that I see people make here is not really choosing the option up front, just knowing the 5 or 6 different options that they had floating out there, and then going shopping because they got a pre-approval letter, but you don't have any sort of idea on what's gonna actually work cash flow wise if you've got this like 4 or 5 different ideas and different scenarios that may be floating around. Choose the one that fits your investment goals. If that's maximizing cash flow, then look for the best possible interest rate with the cash that you've got on hand and make that happen. If you don't care about the cash flow and you're looking for some other scenario as far as long-term appreciation, run those numbers that fit that goal and find out what works best for you. Once you've chosen that, your buy box is narrowed down, you know exactly what you're looking for, you are helping your realtor know exactly what they're looking for you, and it really helps make the process much shorter when you've selected that perfect loan option. Your realtor has the numbers, your lender has the numbers, and everybody can run those scenarios for you to make sure that you're maximizing cash when you're making that purchase. And that's it. It's really a simple process when it comes to applying for an investment loan. There's no scary different banker that you have to use. You can get into that once you've got the 10 or more properties and you have to talk on different loan scenarios, but you can go to the person that did your primary mortgage. Again, make sure they're investor friendly, but it's the same process that you went through. You're just now telling your lender what your goals are so they can better choose an option for you. When you're buying your investment property, it's a little different than your primary residence. The primary residence, you may have been looking for a certain payment number and making sure that you're within a certain school district and having to move that number around, whatever that may be. When it comes to the investment side, it's just numbers. Finding that deal that fits the best for your buy box, for your investment scenario, and going from there. Having those documents ready, having that conversation, choosing the right option. It's really all you've got to do there. So don't be scared of the process. Again, this is probably the #1 hangup for real estate investors is they're scared to have this conversation because they're scared to be told no. Well, guess what? Go out there and be told no, which by the way, most of the time, if you're finding a cash flowing property is not the case, even if you barely qualified for your primary residence. But even if you got told no, at least you know the answer's not yet. And then you've got time to wait, and then you actually have a reason to wait. But just waiting because of that fear, because you're not willing to go out there and have somebody judge your credit score and your income scenario to tell you if you can invest, that is wasting opportunity and wasting the potential for real estate investing to grow your wealth. So if you want to be stuck in the same place, sit there and don't submit your loan documents. If you want to grow, gain financial freedom, grow your wealth, then get those loan documents in, get all of the supporting documents in, make it happen, be ready to make a purchase when the perfect deal comes up. I hope you enjoyed today's content. If you did, make sure you hit that like button, leave us a comment below with any questions you might have, or if you've gotten over that fear and you actually submitted it, leave comments here to encourage other people to take this step. And as always, hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. See you next time.